Hello, Warriors. Everyone doing okay today? Let's have a great week. Look for the Q&A here. Where did I put it? No open questions. Okay, everyone. So, a couple of interesting developments. I mean, we all know about tariffs not going through on Mexico, which really, everyone came in risk on. So, there are a few things that I was planning to do that because this happened over the weekend, it didn't happen. But let's talk about what is happening. How you make plans over the weekend and then some news event. You normally would have gotten follow through in some markets like gold. I was looking to short, and yen I was looking to buy. And then I didn't chase gold lower last night or yen higher last night. Anyway, I have to deal with what we have right now and what I see in the euro. And by the way, can everyone hear me okay? I'm looking at the volume thing. Everyone could hear me okay?
We can hear you, Coach. Good morning.
Thank you. Good morning, Stel. So I think it's not that constructive. That was, I thought going home Friday was a pretty good breakout out of this falling wedge. For it to, just be hanging around the breakout right here almost makes me think it could be a false breakout. And the same look happens in the dollar. Really different look. This was a falling wedge that we had a breakout over. Everyone see this? Give me a Y. And then when you look at the dollar index, you had a falling wedge, but you had a throw over, right? So look, we're back inside the throw over here. So tough for me to do anything here. I mean, I thought we were going to have some type of bearish action, continuation action, but talked to some of the people I work with on Saturday and said, if we get back inside this wedge, something different is happening. So something different is happening. What am I doing about it? Nothing right now. But I'd be a little concerned when you see the euro not following through on a breakout. We had a throw over in the Dixie on Friday, and here we are back inside the formation. So I actually think it's positive action in the dollar. So that's that. US dollar yen, I was looking for one more break down here, a confluence of 107.60. And, based upon Friday's close, I thought I'd have it. I didn't reach for it. I could have paid 44, so I'd be up 20 pips. And, looks okay. But again, being disciplined and patient means that I risk missing things. So I'd rather miss things. Now, I don't like missing things because I think that when this happens, it can be a pretty good turn in the end. And maybe I should just go with it right here, but I'm not. So, I mean, one of the only things that I talked about over the weekend that is setting up, and I have a little drawdown right now, is I wanted to short the gold on a third drive. Look at this. See, I had one, I had two, unless you counted this. I didn't count this. This form looked better to me. Maybe we still get it, and maybe the end still does go to 107.60. But I thought after Friday's close, we came off a little that we'd get a third drive. Anyway, right now it's a 2, doesn't look great. Silver much weaker than gold, which probably puts the gold-silver ratio. But it's right here. This is something that I mentioned that silver could be a buy here. I'm not doing it. So let's see, the gold-silver ratio I thought was peaking. Let's see if we have new highs on it now. Gold-silver. Yeah, but it's diverging pretty good up here at new highs. You look at the daily, it's diverging on all time frames. So this would tell me if I really think it's going to turn here in the next couple of days, and my preferred long would be silver over gold. And that's not what's happening today, and that's what pushed the gold-silver ratio up to test the highs. But look at the glaring divergence on the 4-hour. Last confirmed high really was all the way back here, May 13th, almost a month. And from there we've been, struggling and grinding and struggling and grinding. And this RSI at new highs is, well below, I think well below 70. Yeah. So I don't know if, can you trade this CFD, Steve? I know you watch it.
Gold silver, you mean the gold silver ratio?
Yeah.
Even if your broker doesn't offer it, it's always extremely easy to trade it synthetically.
Okay.
So you want to be long the gold silver ratio, you buy gold and you sell an equal value of silver, or the opposite. You buy silver and you sell, an equal amount of gold. That's it. So yeah.
And you would need CFDs to get that, because could you come up with that equal weighting with different futures contracts? Because the gold contract's 100 ounce or 5.
It's much easier, obviously, if you do it spot or CFDs. Yes.
Okay. All right. Well, that's all I have, except that people have to subscribe today, so they have a good week. And this is what's going to help you have a good week. Hanging out in the chat room. Blake, besides going to Disneyland, when you go to the end of the galaxy and you could look back at Earth, you actually have a future view of what markets are going to do, because, it's the Einstein theory of relativity. So Blake went to the end of the galaxy and he can see what's going to happen in these markets for the next decade. So I'm really looking forward to seeing that research on our site, bro. Don't you think if you went to the edge of the galaxy, you'd be able to see into the future?
If you went to the end of the galaxy, you would be able to see the next galaxy.
Anyway, what a cosmic
so on and so forth.
What a cosmic experience it is to hang out in Faith every day. You guys
that is true.
So? Huh?
That is true. Although for a couple of days, and no offense, I wouldn't mind, being absent and being in Disneyland instead.
Yeah. Well, we are every day, Steve, when you think about it. Only it's called financial Disneyland.
No, to be honest, and I don't want to be unfair with, the big players that formulate, market movement and politicians. They are making their best to make everything Disneyland. So it's okay. It's okay.
Yeah, I wish this news about the tariffs, because how I was like mentally prepared to, buy the yen lower and short gold higher, that if the president would have waited till tonight to do it, I would have had what normally happens. You get follow through. Gold had a strong week. So normally you get follow through to the upside early in the week. I mean, so he's interrupting trading patterns for me. Okay, with news flow happening, and it changes how markets normally behave. Because if you see a strong weekly candle, you can usually expect follow through and new highs for the move, or vice versa on a bearish candle.
Absolutely, but
it threw me off today, man.
It is still extremely early. I mean, by the end of the week, we might very easily actually have continuation candles to the candles we saw last week, right?
Yeah.
I mean, yeah. So to be honest, I'm not.
Why are you so honest today? Why today and why to me?
It's a bad habit in general. That would make me a very lousy politician, I guess.
Yeah, when all I know is in my life, Stell, let me ask you if you feel that way. When someone says this to me, let me be honest with you, Dale. You know what I'm thinking?
He hasn't been honest before.
Yeah, why me and why now?
Yeah. I must say, guys, in terms of Donald Trump, it's for me, it's unprecedented that a U.S. president has so much power over markets.
Can you imagine how much money his friends are making?
Yeah, I was gonna say, imagine theoretically speaking, if we had somebody
theoretically.
he trusts, really trusts, and had an inside view to these tweets before they're made.
Can you imagine
lots of money? Theoretically, lots of money.
Yeah, theoretically. Yeah. Carl Icahn in his demo account. All right, so that's theoretically. All right. Anyway, I'm pissed off this morning. What? I'm mad as hell, and I'm not going to take it anymore. Remember that movie?
Contain it.
Remember that movie?
Which movie was that?
It was about a guy in media, and he opened his window, and Albert Finney, I think, played the lead, and he yelled out the window, "I'm mad as hell. I'm not going to take it anymore." And then everyone in New York started opening their windows and saying that. Still, you know the movie?
No, I don't actually.
Doesn't ring a bell, to be honest.
How about the Peanut Gallery? I know someone out there knows what I'm talking about. You know, when you get to be my age, you remember only parts of the thing. Titles, I have delayed fuses. Anyway, all right. So what are you doing?
You're not that old.
What are you going to do with the action that we came in to deal with today, Steve? You know, you could take the chart
absolutely.
over, but I you know, and also, guys, remember, it's not illegal to have more than one account, not yet. So get a hold of our sponsors. Introduce yourself to a couple of real nice guys, very knowledgeable guys.
That is very true. And by the way, let me make a comment here. I found it quite peculiar. Here in the reimbursement page, both at the top and at the bottom, you have you know, an email address you can use to contact them. You also have a Skype number. Trent was telling me that he actually receives more emails than he does calls, which I found
doesn't surprise me.
It surprises me because, you know,
millennials do not like to talk.
I always prefer to talk because, you know, it's much faster and easier to, you know, to get an answer than follow through with because, you know, sometimes an answer might create, you know, another question or whatever. So Trent is a very, you know, very lovely guy. I strongly suggest you speak with him, even if it is just for advice. These guys are really great, and they know the markets and brokers, you know, better than anyone I've seen. I explicitly trust them. I'm their client, and, you know, I'm just feeling a little bit stupid for taking that long to do it.
Yeah. Well, forgive yourself. And tell me what to do in the markets now.
Okay, let's see what we're supposed to do with the markets. Stelio,
you know,
yes.
you usually you know,
pick up when Dale
pick up when
Dale finally shuts up
at the bottom of the hour. But today Blake isn't here because he's enjoying the Star Wars part of Disneyland. So let's begin. I know it's not in order, but
no problem.
It was the UK data were astonishingly abysmal, right?
Yeah, it's there's been a few things about the UK actually. So first of all, we had the data which was not good. There was a month-on-month reading on GDP, which, you know, it's not the one that people usually follow. We usually follow it quarterly or quarter-on-quarter, but it was a negative print. Industrial production, manufacturing production, very negative. Trade balance actually surprised to the upside, but really it was very small. So overall, it was not good.
Yeah, but still negative, of course.
Yeah, still negative. I mean, what are you talking about? Yeah. Overall, not good. It is kind of to be expected going into now this last phase of uncertainty. We still don't know what's going to happen. You know, I read stories all the time about companies, especially, you know, small to medium enterprises who, you know, have all this uncertainty and they can't invest, they can't plan forward. You know, it must be terribly frustrating. I mean, I don't own a UK company or a company that operates in the UK, but if I did, I'd be really pissed. So this thing has to end at some point. And going into that now, we have Theresa May not being the prime minister anymore. You know, cheers and clap all around. But we are now starting the process of finding her successor, and it's not going to be done by general election. It seems it's going to be decided within the party, the Conservative Party. So they're going to elect a new leader who is going to be the next prime minister until we get elections, which we have no clue when it's going to be. So until then, Theresa May actually will remain kind of an interim PM until the new leader is elected. But the process has started, and the most likely successor, Boris Johnson, a very controversial figure. People either love him or hate him. He has said over the weekend that he's considering not paying the divorce bill, which is about 39 billion pounds, I think. And that brought a lot of reaction. And I think it was Macron. I think it was French Prime Minister Macron who said that would amount to default by the UK. So it's heating up right now. And I must say, with the way Theresa May was handling the whole thing, my personal opinion was that she was showing her cards. She was very easy to read. Now you have this guy, Boris Johnson, probably coming in to step into her shoes, and he's unpredictable. I think the Europeans are going to start to get nervous now because they can, Boris Johnson can do anything in terms of a deal or no deal or leaving, hard Brexit. Anything is possible. Theresa May, we kind of knew that she was never going to allow a no-deal Brexit. At least she was going to do the best she could not to allow it.
Yeah,
so
that's true.
In that respect, the sentiment is really bad now for the UK. Oh my God, people are saying, the chances of a no-deal Brexit are increasing. I actually think, I'm not sure, okay, obviously, but I think that if there is any way the Europeans might get pushed into a corner and offer some kind of compromise, it's probably going to be from a leader like Boris Johnson and not from a predictable person, or at least in my opinion, a predictable person like Theresa May.
Yeah, Theresa May in general, I mean, since the first day I remember hearing her, I mean, it was obvious she was very weak for the role. She was required to play. I mean, it was more than obvious that, you couldn't get anything with her on in the leadership. She was, extremely conservative, having to do with the approach. I mean, she was trying to approach a very hard issue with a very soft way, and that doesn't work.
And it wasn't just that; it was that she was. You could easily tell straight away what she was thinking. I play quite a bit of poker. I would love to play poker with her. It's seriously. It's maybe it's my opinion, but it just seemed that way to me. So. So that's what we have out of the UK. So things are hotting up for sure. The pound, I mean, you can have a look at it, but the pound is weakening a bit more. It's euro pound is getting close to my level, which I want to sell at around 0.9, around 90 basically, but we're getting there.
Slowly. Yeah, I agree with you. Euro pound is getting that last leg higher. It looks to me like, a little bit higher from here, and it might be a good place to actually start, looking for a reversal. As I was saying, though, the other day, we're not there yet. The pound, I kept advocating that the pound should be the last choice for playing, yen, yen weakness or US dollar weakness. This was the main reason. I know that at any given point, if we get, some kind of a surprise headline from the UK, pound will literally fly, and one day we'll see that happening. But when that happens, I think that the move higher is going to continue likely for weeks. So I find no reason why somebody would just be playing in the roulette, such a possibility in advance. You're going to be losing a lot more money until that happens. So in my opinion, no reason to do it. I mean, you want to play US dollar weakness, as I was saying last week. There are other places. In the blog post that we actually wrote, I included several pairs as potential good opportunities to be long against the dollar, but I didn't put in there the pound as one of those, simply because the pound, of course, as they say, a tide can lift all boats, but it's more than obvious that the pound boat is the heavier at the moment. So,
yeah.
I expect it to benefit less than the rest when dollar is weakening across the board, until we get to a point that, this is going to change. But this can happen in months from now. So, why risk it in advance? I really find no reason. And speaking of which, we've had many, many people asking about the pound yen again and again. In all actuality, what I see in the pound yen here is a bear flag. And today, so far, the pound yen, and I wanted to show that explicitly because I found it peculiar. Last week, we had several questions about the pound yen, which I found, quite strange, because usually when people ask about something that has been going down, it's because, they're looking for a reversal. So, I found it quite peculiar that so many people were looking at the pound yen, and, that's why I wanted to show it both on the 4-hour chart. You can see it here. This looks to me like a bear flag rebound, and we're actually testing support as we speak. And here it is on the daily chart, which, besides the fact that you can also see here the bear flag, if you pay attention, so far the daily chart is a bearish engulfing. So, quite a bearish, daily candlestick to start the day anyhow. So, one way or another, I do believe that the path of least resistance remains lower, especially for the pound yen. And since I'm talking about the pound yen, of course, is a factor of, what is happening with the yen and what is happening with the pound. We've already seen what is happening with the pound, and we've discussed about it. Now, the other question is, what is happening with the yen? And the answer is, the yen is still holding this support area. So, there is one positive for the bulls here of the USD yen. So for the yen bears. But on the other hand, if you overlay what has been happening with risk, which is usually very tightly correlated, just look at the stock indices. I mean, the S&P has rallied to the highs of today more than 6%, to the highs that we had a little bit earlier, more than 6% within like 5-6 trading days, right? What has the USD yen been doing at the same time? Nothing. It has barely rebounded from, a critical support. So if that is what the USD yen manages to do, while, indices are appreciating, very, very strongly, I don't want to know what's going to happen here if risk sours for one reason or the other. If we get any negative news again with the China deal, or something else, or data keeps on coming weak or whatever. So I have to say that although I wouldn't advocate for anybody to be selling the USD yen against this horizontal support area and the 61.8, I would find it extremely hard to advocate for somebody to be buying it, with the exception of an appealing risk reward. So yeah, if you want to purely do it, for technical reasons, you see a very appealing risk reward, I understand it. But, this rebound so far looks to me, very corrective. I still see a very heavy type of price action. And as I said, especially considering what is happening with, risk assets, which are, traditionally very correlated, I would be very, very afraid that, something goes wrong with risk and USD yen is going to be breaking down. And once that happens, and people realize that this time it is breaking down from a multi-year, there you go, symmetrical triangle, I think that things are going to, start rolling. And I find it very easy to believe that once that happens, a plunge down to this spike low at 104.65 is going to come very, very fast. So, that's what I think about the USD yen. And that is what... Yes, Elio?
Sorry to interrupt. I just wanted to say, speaking of the yen, I had something to say, but, finish with your...
No. I was done with this thought process. I was a little bit afraid when you interrupted me that my screen had frozen.
No. Your screen is fine.
Okay.
I want to say that we had, speaking of the yen, we had the GDP print for Q1 out of Japan, which came in 0.1 higher than expected at 0.6% quarter-on-quarter.
As we've seen in the past, that's irrelevant because yen is really rarely or never responding by moving higher when Japanese data are good.
Yes, that's true. It's more risk correlated, but it's worth pointing out that 2 quarters ago we had the negative quarter. People were talking about the recession, but now we had two. But now we had 2 pretty good quarters, like 0.5 and 0.6 so far. So that's just something that takes the pressure off. If there was any pressure on the yen, it takes it off.
And since we've focused so much on the yen, and we have extra time since Blake isn't here, it's worth also having a look at what is happening here with with the Nikkei, which definitely looks more constructive, at least, than the USD yen. I mean, we did have this ascending channel, we did break down, but we found support in this horizontal support area, and we've now broken above previous support, which I expected that it might have acted as a resistance and get rejected and moving lower along with the USD yen, but so far that doesn't seem to be the case. So the Nikkei is holding somewhat better. It's not that Nikkei is one of the strong indices, quite the opposite actually. It's more than obvious that if you want to be buying stocks, Nikkei would not be your first choice in any way. I mean, the Nasdaq has broken above this descending channel. The S&P has done the same. Even the DAX is currently, and I wanted to mention the DAX today because, as you see, the DAX is currently, I wrote that on the end of week analysis, the DAX is at quite an important juncture here, because a breakout from this horizontal support resistance area and this descending channel is actually going to point that this move lower, which so far was a perfect ABC, was just that, a corrective move lower. So we should expect more upside from here. So what happens from this area, like roughly the 12,100 area, is important for the DAX. If we break above it, I do think that the DAX is going to be moving to post a higher high than the one we previously had. Perhaps a move towards the 78.6 at 12,900 looks like a good next upside target. The FTSE, although it also had suffered a little bit of a pullback lately, you can also view this as corrective in form, and we do seem to be breaking higher from here as well. So FTSE, more or less, as you see, an equivalent picture. It looks to me like this. By the way, keep in mind that this could end up being some kind of a not so good looking head and shoulders formation, but this possibility is now out of the way, and what we have in place is probably pennant, right? So FTSE is already making the move. Obviously, a depreciating currency does help. It's not the only factor for sure, but it does help. What still looks very, very weak to me from stocks are Chinese stocks. So either you want to have a look at the Shanghai Composite Index or the FXI, which is the Chinese large cap ETF, you will see more or less the same thing, which is what? Quite an impulsive move lower. And, this looks to me like a corrective consolidation. From a technical perspective, we even have a leftover gap here, which shows weakness. The fact, that we gapped lower, and when we started rebounding, we couldn't even fill this gap, shows extreme weakness, in my opinion. So I wouldn't be surprised at all. Quite the opposite. If we saw a continuation lower, this is my main case scenario in this case. So I would expect weakness from Chinese stocks to continue here. From a technical perspective, I think it looks very, very clean. This is a textbook bearish consolidation. Stelio, what kind of data do we have now? Canadian building permits and Canadian housing starts, right?
It's nothing major, yeah.
Okay, which is a good opportunity then for us to have a look at the USD CAD, because I know that many people got surprised from the turn in the USD CAD. I didn't. I expected it. Unfortunately, I pushed my luck because I was hoping for higher prices to sell. I was looking for this 136.60 areas. I got greedy there and I paid for it because I was looking for a move lower. I should have done what I usually do. I should have scaled in after this false break higher and, ended up being at least with half a position. amateur mistake from my side, but it is what it is. It has now happened. So let's see, 10 seconds for the release. Let's see Canadian data since we're here.
Oh, housing starts is out already. 200.
Oh yeah, you're right. 200.
Slightly worse.
Slightly worse. Oh,
building
Canadian
permits
building permits,
huge.
14.7 versus 1.3. That is
what is it, seasonality or some kind of a tax thing? I don't know, actually. I have to, it would be interesting to read up on that, but that's a huge number.
That is literally a huge number. It's like more than 10 times what the market expected.
Yeah. I'm actually looking at the historical values, and you do get quite a few swings like
variations,
that. So
yeah.
There were a few prints a couple of years ago, minus 20% and minus 25. Yeah, so let's not put too much.
Anyhow, quite a strong number here, yes. Undoubtedly. So, the situation with the USD CAD is quite clear here. One thing you can't blame USD CAD for is that it hasn't been playing in a very technical manner. So, first of all, let's look at the long-term picture, not a very long-term picture, because we can have a look at that as well. So, if we go back just to, a summer of 2017, so if we go back 2 years, you'll see that that is when we started this appreciation, which, is quite nicely channeled, as you see here. But, going back to the beginning of this year, we started forming another ascending channel within that larger ascending channel, okay? In any case, the manner of either the bigger appreciation or the smaller one, the channel within the channel, in any case was never impulsive. When you see so much overlapping, so much choppy price action, you know that this is textbook price action that doesn't lead to a fast appreciation, right? And at some point it is bound to fail. So the inner channel has already failed, right? We've even threatened to break below the 200 DMA here, which is the only thing, holding the pair at the moment, in my opinion. Which opens the door for a retest of the larger channel support, which coincides with the 61.8 of this last move higher, both of them at 131.20. So, in my opinion, a retest of that 131.20 in quotes is unavoidable. I say in quotes because, nothing in the markets is 100% predictable, but I will have to say in advance that I will be very, very, very surprised if we don't visit that area rather soon.
Steve, your screen is frozen, unfortunately.
Okay. Now it is frozen. Okay.
Yes.
Good. Okay. Thank you for telling me. What am I showing?
You were showing USD CAD, but nothing was moving. No quotes, no nothing. So
okay,
you were showing.
I stopped sharing, and I'm going to share again.
Yeah.
By the way, guys, that movie was Network with Peter Finch. Who,
okay, Network.
Yeah, it was a great movie. You guys should watch it.
Let's have a look at it. Still, you tell me.
It's still not moving. Can you move your cursor? No, nothing's moving.
No, black.
I've even stopped sharing and started sharing again. So just tell me when it comes back.
We can see USD CAD now, but it's still, at least I can see it. And
from what we saw from the previous time, at some point it's going to come back on its own.
Okay.
So let me know. Yeah, I see the social. Do you mean the social network, coach?
No, network.
Network.
Okay.
Yeah.
I think it was in the 70s.
In 1976.
Yeah, you're a little pisher.
You weren't even born.
You weren't born, Steve?
No, he wasn't.
Oh,
the screen is still frozen.
Yeah. See, this is what Peter Finch was so upset about, and he wasn't around for Zoom. They had cameras, man.
Yeah, good thing we have a lot of time today, so don't worry. When it comes back, still, I paused, I restarted, I stopped sharing, I started sharing again. If you want, what we can do,
I can take the screen.
Why don't you take the screen? Yeah, exactly. I think that will make it work immediately. So why don't you take the screen for a second?
It reminds me of the Stones song. It wasn't the Stones did Painted Black.
Okay, I'm taking the screen. You want to continue? Yes. Desktop 1.
Okay, now I'm seeing your screen. Good.
Okay.
So let me try to take it back from you.
Yes, please.
And tell me if it works. Done.
We're seeing your screen again, but it's still frozen. What the hell is that?
Black.
That's quite weird.
Other people are seeing black. Other people are seeing black
The
screen
other
as
time
well.
it just came back on its own. I really don't know what to do. I mean, I spoke with them. They told me it seems to be a network issue. I told them, how is that possible? I mean, I have no problem. My voice comes through, 100% clean. I've run, a speed test. It seems to be fine. I mean, I can even do it now as we're speaking, out of curiosity. Yeah, my ping is perfect, 5 milliseconds, and my speed is perfect as well.
This is weird.
Yeah,
it brings me back to the problems you had before we go to webinar, remember?
Yeah, it is. Which was, again, weird, and it was something very special, if you remember. That had to do with the speed. Yeah, my upload is fine as well.
Steve, you know what? Maybe I'll take the screen and you
go ahead.
Log out completely, quit Zoom.
Go ahead.
That's
what
I'm gonna take the screen.
Yeah, that's what I'm gonna do. And I'm gonna be back in a few seconds. Yeah.
Okay.
Nice look at the dollar there.
Well, this has been, I mean, I've been talking about this chart for months, remember? And this is what I was expecting. I'm expecting the Dixie to go down. The problem is, will it go down because the dollar depreciates or because the euro appreciates? Because remember, we said it's 50-something% of the index is euro dollar. I still think the dollar is going to be a little bit vulnerable going forward. But on the other hand, having said that, we're pricing 4 rate cuts so far. It's already a big hurdle to overcome, and we said last week. I mean, it's probably going to be either very little rate cut, very few rate cuts, or much more than 1%.
And you allow still for a rally to that red line comes in a little over par.
Yes, exactly. Yes.
So it could still do that before.
I'm back, and I can try it again. Let's see.
Try it again.
Okay, tell me if it works.
Same.
I can see a screen with the network.
Yeah, perfect. Okay, then it works.
That was up before your network thing.
Yeah, go to your chart. Go to your chart. I can see things moving. So, okay, it's working.
Okay, it's working. Cool. So next time, that's what we're going to do, which is extremely fast because it takes like 50 seconds. So this is the network you were talking about, Coach, and it has actually a very good grade to 8.1 out of 10. It looks good, actually. I'm going to put it in my watch list.
Yeah, classic. I'm sorry you weren't born yet, man, but
actually,
you'll appreciate it.
Actually, indeed, I wasn't born. I was born like 3.5 years after that.
Yeah. That's because your dad opened the windows and your mom, I'm mad as hell and I'm not going to take it anymore. Let's have kids.
Stella, by the way, probably it's because I exited and I came back. I don't see any questions in the Q&A. Is that the case?
No, there are.
Yeah, probably you can only see what was coming in after you logged in. I'm guessing.
Yes, but there is no questions. There are a few funny comments.
Okay, so let me know if there were any. Okay, because I can see anything that was posted before. Yeah. Okay.
Actually, Forex Gal is asking for USD SEC, but have a look at whatever you want to have a look, and then
absolutely. Let me finish with that. So although it is easy to rebound and retest this inner ascending channel before we move lower, it is very, very likely. I do think that eventually we're going to revisit this 131.20 confluence of supports, and if we do break below that as well, I think there's going to be a lot more downside for the USD CAD. Now, speaking of the USD SEC, so the USD SEC, first of all, a pullback to retest that previous high here would have been, just a bullish pullback, right? Like a little correction. Now that we've penetrated through that, things start becoming a little bit more complicated for the pair. So usually, if we see an almost perfect inverted correlation between the USD SEC and the Euro USD. So that means that if the Euro USD holds the current support area that it's testing, 113 or even a little bit lower from there, and moves higher from there, which is very likely, I think that the USD SEC has nothing to do but continue lower. The areas that I see here as possible support are like 920, and after that is like 910. So I would find it quite likely that we're going to see more downside towards these areas and see what happens from there. Keep in mind that we also had like a false break from this ascending channel. So that's another thing to take into consideration. So I really have no reason to believe that this move lower in the USD SEK is done, complete, or whatever else. It looks to me more like we're consolidating before continuing lower. So that's what I think about it. And Stelio, here is your favorite, USD NOK, one of your favorites, USD NOK, which Friday at the close was testing a major support area as well. That 860 area not only is a horizontal support area, but it's also very, very close to this ascending channel support. Keep in mind that this ascending channel has been in play since the very first days of 2018. So it's now like 1.5 years that this has been in play, which means that, you know, a break below 860 is first of all going to violate that. And then we open the door for a retest of 840, and 840, we know what 840 is. 840 is this long-term descending channel's previous resistance. Once we broke above it, we retested it 3-4 times. In every single occasion, it acted as support perfectly. Now, I don't know if we're going to go back there, if it's going to do the same trick once again, but definitely it's going to provide a good risk-reward opportunity for people to be buying the USD NOK. In any case, 860 is also support, as I said. So if you really believe that dollar is going higher from here, and you know you like the NOK to be short, you know this is an excellent area to try it. It might actually work just fine, because as I said, this is a 1.5 year old channel that is in play here. So nothing to really dismiss as you know, unimportant to the market. It isn't.
Steve, sorry
Yes,
to interrupt. This is happening again, man. I hate this. It's stuck again. This is not good.
No, it isn't.
What the hell?
Yeah, actually it isn't. Twice in a row.
Because it's weird, you know. Last week you were talking for, you know, the usual amount of time, and it a couple of days it didn't happen at all. Now twice in 10 minutes.
Yeah, and it's let me see what other options I have here. Nothing really that I haven't already tried. Okay, I just stopped sharing. Can you at least see that I stopped sharing?
Yes, I can.
Okay, that is something. Let me share again. Let me try to share another screen, actually.
Yeah.
What about now?
I can see the chart, but it's stuck. It's frozen. So it's the same thing. You have to log out and in again, log on again.
That is very weird. Okay, Stelio,
okay, I'm taking the screen.
Take it. Yeah, thank you.
Yeah. This is really weird. We have to address this because we can't keep doing this every day. That's for sure. So, okay, one of our friends is actually asking, do I look at monthly charts all the time? I don't always look at monthly charts. The way people who know me is the way I trade is very different to the other guys who are much more short term. So I tend to look at the long-term chart to decide, and I look at the fundamentals to decide which way I want to be in a certain pair or instrument. And then I go to the ForexAnalytix site and I look at what my colleagues are saying in terms of more short-term points to pick the best points to enter and exit, because I am very well known as being a little bit early on trades. So I will take all the help I can get.
So we're not only both very sappy and sensitive, we're both always early. Kindred spirits. You know what? You'll live longer. And people listening, I really think that, you know, the in and out game really is for younger guys. You know, I mean, on the floor, they were younger guys. And I think that if you can find any way to take the pressure off yourself, being more macro is one way to do it still.
I'm also not a big fan of scalping, as you know myself as well.
Your screen is back too.
Yeah, I know. I've been here for some time. I just even restarted my browser before I took over. You know, I thought to restart my browser. I don't know if it's going to make any kind of difference, but whatever. So
anyway, Steve, don't get jealous, but Stella and I are very much alike.
Yes, we are.
Okay. I have no reason to interfere. Do your thing. Do your thing.
Yeah, it's smart of you to know when,
Stella, don't
there
worry.
for you.
I'm not gonna tell anything to Semiramis.
Yeah.
All right, so that looks
And
negative.
another couple of pairs I wanted to show actually, because if you remember, we had been talking about them, is the Aussie and the Kiwi. So first of all, I did like the Kiwi higher, and I still like it. I prefer it over the Aussie. There's no question about it. Keep in mind that the Aussie's daily candle so far is a bearish engulfing, not a good sign, definitely. And it's more so given the fact that we tested Friday this previous support area, also the 50 daily moving average is there, the 50% fib is there, this previous horizontal support area is there. So we tested so many areas, the confluence of so many areas of resistance, and so far we're getting rejected from there. So, that is definitely not a bullish sign. That doesn't mean that we're not gonna move higher, because that just proves that this area, as was indicated, remains important. Now, is this just going to be a pullback and then we're going to move higher? If that's the case, then you should be looking for much higher prices, because I do believe that if we slice through this first big resistance area, then people that were very, very skeptical, as I'm expressing my skepticism at the moment, are going to start being less skeptical about the fate of commodity currencies, which means that you should expect more appreciation. But until that happens, you need to be careful. I think that there is a big chance that we might move lower from here, even if it is for a period of time. Kiwi rebounded in a much stronger fashion, also has stalled. I was looking actually for Kiwi resistance a little bit higher than we actually stopped on Friday. So I was expecting a retest of this 6710 area, triple confluence of resistances, the 50% fib, as it was the case with the Aussie. The 200 daily moving average in the Aussie, it was the 50 moving average in that confluence, and the horizontal support resistance area as we had with the Aussie. So I was expecting the Kiwi to make it a little bit higher before seeing some kind of a reaction. We didn't. So far today, we have an inside day. Also, look at this difference. So far today, the daily candle in the Aussie is a bearish engulfing. So far today, the daily candle in the Kiwi is an inside candle. So even in this pullback, we're seeing a divergence that points to Kiwi acting better than the Aussie. So let's see what happens from here. But in general, if we want to have a look at what is happening with the dollar, so if we want to go to the DXY, which is key here, there are two things to notice. First of all, the DXY has already violated a major trend line. It was this ascending trend line here that defined the uptrend. So that is definitely a first bearish sign. Another bearish sign is the fact that the move lower has been kind of impulsive if you look at it in shorter term time frames. But we're currently testing and so far holding, because we closed on Friday right on top of it, and today we've jumped a little bit higher, we gapped higher, we are forming an inside day so far, this ascending channel that you see here in blue. Okay, so what happens from here? My intuition tells me that the dollar is going to move lower. Now, can it first, rebound for a couple of days before it does so? Yeah, it absolutely can. But I think that eventually the chances that it's actually going to break below this, let's say 96.30 area and continue lower are very high. So I'm already looking for opportunities to be selling the dollar and not doing the opposite. But if for some reason you have a strong thesis that the dollar is moving higher from here, there's no better place to be buying it. It's the start of the week. We've held so far the support area. that we were testing on Friday. So, go ahead and be my guest. Personally, I'm not looking to do that, as I said. Okay. Coach, by the way, do we have an interview today? Coach. That. And the Q&A, by the way, since I had to log back in, if anybody has any question, please retype it so I can see it, okay? And sorry for the inconvenience. Okay, so let's have a look at a few of the crosses. Especially, I wanted us to have a look at the pound crosses. So pound Aussie and pound Kiwi, I have a reason for wanting to show them both on the daily and the 4-hour chart. So first of all, daily. As you see, we started quite strong on the day, and so far we've retraced most of the gains of the day in what seems like a very weak reaction. Just look at it. I mean, we've had 1, 2, 3, 4. This is the fifth consecutive day that we're getting candles more or less that show indecision. Now, if you go on a 4-hour chart, you have a look at the pound Aussie. This is the pound yen, by the way. We saw it before. If we go to the 4-hour chart of the pound Aussie, what do you see? Other bear flag. Okay, it's very clean so far. So pound Aussie, this rebound looks very corrective to me and extremely weak. So, I don't find it hard to predict that, statistically the chances are for at least one more push lower. The next area of support is a little bit higher than 179. Okay, pound Kiwi. I saw your question about crude, and I'm going to visit it actually. Thank you for reminding me. And I'm going to also visit the metals. And we have questions about USD ZAR. Okay, I see a lot of questions. So let's hope my screen doesn't freeze again. If it does, please type in. So pound Kiwi, as you see, maintains, it still trades within this descending triangle. It's not actually a channel, as you see. Although if we wanted to draw a parallel with this one, let's see if it can actually channel as well. Easy to call it a channel. But, you can view it like that as well. Okay, so, it remains weak, 50% fib. We found support at it previous time, also horizontal support area. But, it still looks and behaves, in a very weak manner. Now, we had questions about the USD ZAR. Let's have a look at it. Metals and crude. So USD ZAR. USD ZAR. Oh, no, let's have a look at it on the daily. There we go. Okay, there we go. So USD ZAR. It has broken above this triangle. That was definitely bullish sign, pointing to higher prices. Found resistance at the 78.6 so far. It's, as you see, it's, the general direction remains higher. Even this move lower was more or less corrective in nature. Now, would I be buying it here? You can definitely try to buy it against this 1470 area. Okay, as you see, it has acted as support resistance multiple times. You can even buy it if it dips lower against this 1440 support area. But if it breaks lower than that, I would be very, very careful. Until that happens, I maintain, a bullish bias, but, just because I have to give an opinion here, I won't be trading it. I think there are better opportunities out there, my point of view, okay? And I know that there is a positive carry, of course, by holding the South African rand. So buying the dollar against one of those exotic currencies, if momentum is not strong to the upside, not a good idea, okay? So if you're looking to short it, we got rejected from the 78.6, you can do it against that. If you're looking to buy it, I wouldn't be a big proponent of that point of view. Now, crude, quite an impulsive move lower. We are retesting this resistance area, support resistance area as resistance this time, roughly 54.75. Pay close attention to it. I wouldn't be surprised if we got rejected from here and continued lower. So I have no reason to be looking higher from here. Okay. I'm not saying that it can't rebound higher. Actually, it can rebound and it can even make it up to 57.75, which is going to be quite a tough area to crack, in my opinion. It's not easy to determine the nature of a corrective move, but I do think that the path of least resistance remains lower if we're talking about, the medium term. Here it is on the 4-hour chart. As I said, I wouldn't be that much surprised if we rebound higher, but in general, I would be looking for lower prices. Okay, so I still think that finding opportunities to sell crude is a better idea than trying to buy it. Okay, and having to do with the metals, and I think it's worth having a look at the metals on the 4-hour chart. I actually posted an update like an hour before the webinar for gold, saying that gold has almost fully retraced this ascending wedge, which is the natural target of any wedge, and it might find support there. You can see the support area. So far, gold is finding support here. And having to do with silver, I wrote more or less the exact same thing, having to do with this confluence of supports at 1470. So far, it is rebounding from there. I do see this as a quite strong move to the downside in short-term time frames. So I wouldn't be surprised if silver and gold moved lower, for another day or two. But in all actuality, I would be looking to buy the dip. Now, if we're looking about the daily chart, I would be a little bit more hesitant here with gold. Why? Because gold found resistance at this previous high and quite close to this key resistance area. You can see that this 1355, 1360 area is like, extremely, extremely important for the market. Extremely important for the market. From a macro perspective, I think it's very likely that we're going to break out of the upside and continue. Simply because we're seeing the Fed about to go on an easing cycle again, with unemployment being at, I don't even know what kind of lows. I mean, definitely multi-decade lows, if not all-time lows. I don't remember what was the all-time low in US unemployment. And hourly gains, which is a measure of, a leading indicator for inflation, being near the highs. So I would be very, very skeptical that with the path that the monetary policy seems to be taking in the US, I would find it very hard that gold is not going to end up breaking higher. But that doesn't mean that I would advocate to anybody buying gold against a multi-year high when we know that, this level is, so critical from a technical standpoint. So, that doesn't mean that I'm bearish, as I said. I still believe that looking to buy the dip is the better way to approach this. So I would be looking for something like this here as well. Okay. That's my point of view about the metals. Now, having to do with the copper, two things here about copper. We haven't reached my next target here, but I do see a clear loss of momentum to the downside. So, I need to point this out. Here is copper also on the 4-hour chart. You can clearly see this loss of momentum. You can even interpret this as a descending wedge here, right? There you go. So not unlikely that we're going to see some type of a rebound, even a corrective one for copper, even if it hasn't reached the target I was looking for. Okay. Coach, do we have an interview?
We do.
Okay. Very fast, because we had 2 questions about it. I'm going to very fast go over the Kiwi yen and the Euro yen, and you can start. So Kiwi yen, there it is. Kiwi yen found resistance at confluence of resistances. So be very careful here. Okay. As it happened with the Aussie, so far, this is a dark cloud cover having to do with the daily candle. So I would be careful here. Days ago, I actually drew this on my chart, as you see. When I do this, when I show, both directions from a specific level, I indicate that that is a crucial level for the market, a level at which the market has to take a decision about what it wants to do from there. So the fact that we're seeing a reaction from here is natural because it is, an important level. But if we see this reaction leading to an acceleration lower, then I will be looking for lower lows. Okay. Now, on the other hand, if we just stabilize around this area and then we break above it, I will be looking for more upside. In the case of Kiwi Yen, especially, I will be looking for the market to fill in this gap, which also coincides with a 50% fib at 73.72. Okay. And very fast the Euro Yen, and then we can visit the rest tomorrow. Euro Yen, same deal here as with the Kiwi Yen. As you see, I had indicated this as an important horizontal support resistance area for the market. So far, we're stalling here. Let's see what happens from here. You need to respect the downside, though, right? Until proven otherwise, we have a pair that has been moving lower since the first days of February. So, I wouldn't be jumping the gun yet, being long the Euro Yen. And let me be clear with what I see in the USD Yen, how weak even the rebound is. If I wanted to buy the Euro, I would more easily do it against the US dollar than against the Yen for the time being. Thank you, Coach.
You're welcome, Steve. Go get your winter coat. I know that we're almost at the summer solstice, and don't forget tomorrow's opposition. Oh, no, it's today. We're in opposition with Jupiter. Okay, but put your winter coat on because we're going to talk about the Kondraty of winter.
Fast quiz for you, Coach. For $20. What's the name of the largest moon of Jupiter?
Volgi.
Titan. Enjoy.
Okay, thank you. All right, Henrik. I'm making you a panelist now, so you should see a drop-down menu. Looking forward to hearing you and talking to you. Everyone put on their warm clothing because we're going to be talking about the Kondraty of winter with Henrik here. Let's see if I have you muted. Yes, I do. You're muted. Huh. Steve, can you unmute him? I keep getting, oh, I got it. Unmute. Got you, buddy.
Hello, Dale. How are you?
Hi, Henrik. How are you, buddy?
I'm good, thanks. And you?
Good. Great to have you back.
Coach, by the way, from what I see, I'm still sharing my screen. So,
Henrik, you could share your screen. That's a drop-down menu.
There is a button saying, share screen or something like that. If you click on it, you can choose which screen you want to share, and you're gonna take the screen from me.
Request remote control. Is that it?
No, it's called Coach, take the screen from me so I can tell him exactly how it's called.
Okay. Where is the thing? Share. Okay. I'm sharing now.
Yeah, you are. I can confirm. So it's called share. Just share. You click on the button that says share.
Yeah, I'm searching.
There's a menu that if you mouse,
the same menu that you unmute. Oh, I unmuted you. That's right. So
yeah, if you hover your mouse over the bottom of your main screen, that menu should come up.
I can see it. Okay, that's why. Okay, I can see something then there. Sure. There we go.
Yeah. Yeah. Perfect.
Okay. Then I choose which screen I want to share.
Yes. Yes. It's gonna give you a window with all your available screens.
Yeah.
And the highlighted one.
Yeah.
You see this one now saying macro update, or what do you see?
You do not only need to choose it, you need to click share.
Okay. Yeah. Sure.
I'm surprised at you, Henrik.
That I can't figure this out.
Yeah.
Oh, sorry. Coming right up.
There you go.
There you go.
Now
You're
you're
right.
black.
There you go.
There we go. There's your presentation.
Yeah, yeah,
Okay.
yeah. Perfect.
All right. You could tell I'm a little agitated and irritable, but I have a gift for you.
What is that?
A logo or icon that would be great for you. Okay, so we all know that you're a bear because of what you're looking for, deflation, but you're also talking about the Kondraty of winter.
Yeah.
Why not use a polar bear right now as your icon? Because it says both.
Yeah, I could do
All
that.
right,
Definitely.
so you take the body of the polar bear,
Yeah.
and then you shop it and put your head on top instead of the bear's head, and you'll be.
That's me. I got to do that. You
No, really, don't you think it's a good idea?
Yeah, sure, you're right. I'm just not so creative like you, Dale. I think that's fine. So,
well,
I'm not so creative.
you're creative. You're creative. So I'm looking forward to an update. You know, there's been a little heat, and may as well address the elephant in the room. And some people saying, "Oh, they didn't buy gold because you were bearish," and people can't. You're not controlling anyone else's mouse. And they didn't sign power of attorney to you, and everything's time frame. So I'm interested in what you're seeing. I was looking for a little higher to short gold, but there's still a lot of bulls out there. So let's see what you're thinking from here.
Sure.
I bet not much has changed.
No, much has changed. Actually, I think what we've seen, if you look from Q3, Q4, has been a bounce in the first part of the deflation that we started to see unfolding. But let me get back to that. So first, you're absolutely right. The Kondratiev. Oh, God, now my thing is not moving here. Oh, there we go. So nothing has moved. Nothing has changed in terms of my view on the Kondratiev winter. I think some of the things that we are expected to see start to unfold. I still remember, a few years back calling for a trade war. It didn't seem like anything like that could unfold. I still think that we have some of the biggest events ahead of us, and one of the things that will be a pension fund crisis. So we're not there yet. So in
the U.S. or globally?
Globally, also in the U.S. Yeah.
So all these pension funds, like we have a small insurance fund that could not cover, 1/1000th of the pension guarantee something insurance. Why is it the same reason that pension funds are underfunded everywhere else in the world? Because we had this repression of yields, and they just were not able to generate enough return to keep it solvent?
I think that's absolutely to the point. I'm no expert in that field, but I'm just trying to lay out the things that would be normal events unfolding in a Kondratiev winter. But you're absolutely right. So being able to deliver the yield, the return that they have been promising, also. So that's what I see as part of the of that problem. And if you see equities start to fall, hard, that I do at some point, then probably that will be something that will worsen that problem for them.
Yeah, because because of this repression, people have been forced to take more risk to try and generate the same return.
Exactly.
Okay. All right. So go ahead.
Yeah. So we're still there. We haven't gotten to the end of that, and that means that the main conclusions still remain the same. So we still see the one more deflationary bust in this winter, and I'll come back to that. We'll see King Dollar will reign for some time. We'll see all the currencies, around the world will decline versus the dollar, and we'll see oil, copper, precious metals, commodities drop, and a lot. We will have Europe as the epicenter of the crisis, and we'll see, of course, central banks react to deflation, and this will eventually end deflationary developments, but it will not end the crisis, because the crisis will then turn into something which is not something we've seen for some time, but a stagflationary crisis where we will see the economy slump, but we'll see prices starting to move up. And I'll get into why I see that particular scenario.
Isn't that happening already with before even the trade wars started? I mean, I don't think so. For food.
Yeah.
I pay more for housing, but you don't think it's even started yet?
Not yet.
And it won't start until the dollar peaks.
It won't start until the dollar peaks and until the commodities bottoms out. Yeah, okay. And that's it. So why? First of all, in January, I said, well, this is what we can see from oil. and I expected to have some kind of bounce. I actually expected it to be, you know, this blue line you have here in 2019, not to be a move up, but to be more of a sideways movement. It turned out to be more a strong B wave up, testing the blue trend line there. And now it's, you know, we're going to drop. We're going to drop fast from here. So we're going to the events have started. The bounce that we saw from A to B was defining the whole scenario, the whole environment that we've been seeing since Q3, Q4, and it was quite expected in terms of when you have an ending diagonal like what we have here. So you have wave 1 down, then you have an ABC to 2, you have an ABC down to 3, ABC to 4, and an ABC down to 5. And we're just, you know, at the peak of B here, and then
it was
we're
certainly impulsive. This, especially after it peaked at 66.5 and went to 60. Yeah. That rally 61.8 back to 64-ish. The break from there was breathtaking, as far as how fast it got from 64.
But I think you'll see much more of that, and it'll go very fast. Now we just touched down on this area, so we have out from here from 2017. So this is, of course, a support line. But when we break through that, and I'm, you know, I feel very confident because this is not just one picture. You remember, my model works on different dimensions, and all of them points to the same kind of picture. Actually, very much illustrated by an ending diagonal for many of the commodities that I can show you here. So we're going to bounce around here, and then we're going to go lower, and we're probably going to peak down through this line, meaning which has been my goal target for a long time for oil was below 22. I think there is a chance even we could get to around 10 for gold. For oil.
I saw it there once before. Yeah, you probably weren't born, but it broke from 40 to 10.
Yeah,
I think it was in the 80s. Anyway, your chart doesn't go that far back.
No.
I'm older than your charts. Let's see. So I wanted to ask you a little bit about the time of it. So you see this manifesting by the end of this year, early next year?
Well, I think the timing perspective of this has been what has been hardest for me, also with my Euro call. I mean, it has been more resilient than I've been expecting. But if you look at the structures of this, it's quite telling. So could we bounce around here for some weeks? Yes, I think so. But in general, I think we are, you know, the general trend here is that we're going down in oil. And you'll see that when I get onto the other commodities that they show exactly the same kind of picture. But timing-wise, I would guess, my guess would be Q4, Q1 2020.
Okay, that's a good way, you know, for a major turn like this. And, you know, people don't understand it because they trade off 60-minute charts. But when you're making a major call of intermediate term nature, if you can be in the right window for the 30 days or so to be alert for it, not just jumping on it, that's pretty good for a long-term call to narrow it down to a 30, 60 day.
And this is what, and this, you know, if you look at these bigger pictures here with the ending diagonals, they actually tell a story that we're going to see another low. That's the deflationary bust that I see. But then this structure in itself would tell us that it's bullish. Yeah, it is. When we get down here, it's very, very bullish. But that shows that we're going to have a bust first. And it'll be tough on us because we're going still from, you know, 70 almost up here and then down to, I don't know, 22 or even, you know, lower. But that is deflationary. And that's why I've been calling for the deflationary fallouts and deflationary environment. And let me show you some of the other things that I have here.
Okay.
So, I mean,
copper,
copper, it's right. You know, it's the same thing. Here we have a structure with an A, B, and C. We have an ending diagonal, expanding diagonal here. So it's a 1, 2, 3, and a 4. We back tested it. We dropped. So this is 1. Then we have 2. And now we're going to see a very strong decline. This was what I showed in January. And I think, actually things is going to go really quick from here.
I thought I was extreme up at the end of the year. I said that Dr. Copper was getting sued for malpractice by making a bull market.
But look at it. So
I thought 260 was a big call back then, 250. But okay, you're looking for a buck or lower on copper.
Oh, much lower. I think this is going to go below 2008. This is a worse crisis, a larger deflationary bust than what we saw in 2008. And you know, the reason is simple. You have a larger debt around the world this time. You have already, the interest rates are, as low as they can go. I mean, there is not much to do about this. So it will take a whole lot more of a, small QE or some rate rise before the central banks will be able to turn this around. And they know that. I think they know that. That's why they have been staring into this. That's why they panic already. But I hear so many things, on FinTwit on, well, when the central banks won't allow this, but well, they didn't allow it in 2007 to 2008. In 2007, they started from 575 Fed lowering rates, and still we had Lehman collapsing in September 2008, 1 year later, and they have brought rates down to 2.
Okay, so is what we're seeing right now the effects of the mistake the Fed made by raising rates, I don't know how many times, and embarking on quantitative tightening, that even though they say they're going to stop QT, I think in September, that the lag effects from what they did years ago is what's starting to show up in the market. So therefore, when they flip, won't it take time for us to make that transition from a deflationary bust into stagflation?
It will take a little time so when they there is, I'll put it like this: Fed intervened in 2007 September by starting to lower rates, but it wasn't until the moment when they brought in QE that market reacted to it for real and started to bounce from there, and even it went lower, that into 2009 even. Yeah, exactly. So it's not a magical key they have. It's not something they can just turn and then things will turn better. It's a super tanker that needs to be turned, and it takes time. Yeah. So they might start to lower. Of course, they will start to lower rates first, and they might even be a little aggressive on it. And we could see things drop, and they might try to start some QE even, and it will not change the direction of the economy. Remember, during QE3. 2012, 2013, gold still fell around 32, 33%, I think 31%. So, they cannot micromanage the inflationary environment. When this thing turns down, and it's about to do just that, look at the stochastic here, and also RSI could be looked like it is going down. I mean, when this turns down, it is not something they can stop just by lowering rates or anything like that. So I don't see that. Let me move on, because I got quite a lot of slides here. What is that? We had the other Aussie dollar. That was back in January. I said, okay, we're going to see it break down through this trend line here, and move much lower. I still see that. We broke down below that. We have been now bouncing a bit for a week or something like the 2 something. It's about part of this back testing. When that turns down again, it's going to go much lower, and I think we could go as low as 0.48-ish area here, which will be very deflationary also. Okay. And please
China will suffer too.
Oh yeah.
If Aussie is going to suffer, it's because China's going to suffer.
China's going to suffer.
Okay, so do you think the trade war ends, or the trade war continues and China suffers as well?
I don't think the trade war is really about trade. I think the trade war is about geopolitical, challenges and issues, and so it depends on whether they sit down. It's not about trade. So yeah, it'll be going on from here on. I'm pretty sure. All right, and then and also looking at the commodities CRB here, this is also the same kind of diagonal. We have ending diagonal. We'll have another bust down. We saw how we broke down this blue line. We retested it, and then we saw quite an acceleration last week, and we have a negative divergence from this one to this. So we are the things are it's written in the charts. I would say we have also for wheat here the same kind of the ending diagonals. It shows up everywhere, and to me it tells me really that we are about to see a secular turn here. And this is why I'm going to talk about stagflation at some point, because this is the point where the deflationary forces will be played full out, and the secular inflationary trend will start to move up. So
I'm going to become Joseph down there, buddy, and fill those silos.
Oh yeah, sure. But retest of this, the area from out here and having it, which will, coincide with a throw over of the ending diagonal here is A, B, C. We got the structures here. This was an A. This is the inflationary bounce. Everybody, is getting into and say, well, now we bottomed out. I don't think so. Right. I think we're going to go lower. Okay. So. And then we're getting into, so if we look at all these inflation gauges, they all seem like they could be going lower. And then we had this, with gold moving up. Mm-hmm. And if you look at it, really, gold follows and also if you look in 2008, gold follow the rest of the pack. Yeah.
Oh, okay.
There might be some different, structures to how they do it, but they bottom together, they top together, and they decline or drop hard together. And what I see is that when copper, oil, Aussie, commodities, all are turning down, wheat and so on. This is that's disinflationary. And if you look at what gold really respects, that's real rates. And if you look at a scenario where you have nominal rates equal as they are, I don't think actually I could see a spike in them for some time, but even as being equal and with inflation moving down or even seeing disinflation or deflationary developments, then you can have real rates moving up, and gold will not like that. So I don't give too much of, I really do not see the fundamentals for gold moving much higher than we have here.
Well, the technical's telling you then. If you don't,
yeah, well, the technical tells me this story here. So if you look at gold for a very long perspective here, you always have an ABC pattern for a correctional move. And if you look at gold, you have had the 1, 2, 3, 4, and a 5. And then you had A, B, C, D, E, which is equivalent to this, which is a zigzag pattern. 1, 2, 3, 4, 5, A, B, C, D, E. So we're here, and we're going to see a very big drop. And then we're going to drop maybe into an ending diagonal. What if
we break out over both the trend line and the resistance at 1380, wherever it is? You have a B above it. Could it do that and then fail?
Yes. There's no way, let me put it like this, that this is the beginning of a new bull market. Anybody saying that will be proven wrong, I think.
But we could go to 1450.
We could go to 1415, yeah, or 1550, yes, but
okay.
but not in a triangle. No, then you could not. Then this is not a triangle. Then this will be then it'll be a zigzag correction. This one will be a zigzag correction.
Okay.
Then this one will be, so this should be something like A and then an A, B, C, D, but we should still move down there again once more time before moving up.
Okay.
Why not triangle being B in an ABC?
Which one, sorry?
The triangle can be a B in an ABC. So
it is B.
No. I mean in the move higher that you've depicted, not the ABC that you have in circles.
So an A, B, and then C?
An A, which finishes where you have A.
Yeah.
The higher A, I mean, the one in parentheses. So that being an A, then the rest of the triangle being an ABCDE triangle as a B.
So we should end up down here for the B then.
Yeah, and then another move higher as a C.
But then what comes after, because ABC is always correctional move.
Oh yeah, so and then you move lower. Yeah. But I mean, there's also this, because I was answering.
That's what I'm saying.
That's what I'm saying. Dale, that you can still move higher and still be.
But it doesn't ring too well with this picture, or this picture, or this picture, or this picture. So
maybe maybe that picture is what creates it, and people move to it because maybe the market will come off, and people just move to it out of what else is there to buy there, besides bonds.
Yeah, but I don't buy that, because then you'll still see, fundamentally you'll see that if inflation drops because of wheat and everything else, oil is very big component, and you even see the housing prices in the U.S. also moving down. I mean that is disinflationary, so it doesn't ring. I mean it doesn't really ring. I mean I do not see it. So I think that what we're seeing is an A, B, C, D, E here. And there are some rules around how high this was going to top. We're still below 60 on the monthly here on RSI. All bull markets always move above 50 really quick. We have not been above 60. So what happens is that when we have the B wave here, is that catches people on the wrong direction, and it often shows lower volume. So here you have big volume, here you have lower volume. This is a B wave. And then also, if you look at E, you very often shows up in horizontal triangles, which is what we have here. So often you'll see a false break, but it's really where you'll see that you have the bear traps also setting in. I can see the bottom part. Emotional, it also says something about emotional psychology playing in here. Everybody on FinTrade is bullish gold right now, except me, I think. Yeah. So I think this is, this is it. This is where we're going to top. And also it tells me if you put this up as well, you'll also see that if you apply the length of wave A and take, the length from this topping here and take 61.8, which is a normal length, then it'll give you right down to this area, which is the bottom of wave 4. So there are so many Elliott wave type of indications that we are going to go to this area. And I think it's going to be rather quick because it's going to be part of a deflationary bust. So again, with oil, with the rest of the deflationary gauges, we're going to see it move very fast lower. And also, everybody being bullish gold now should question themselves what happened to silver. I mean, it moved down. It topped in February, March, 1, 2, 3, 4, 5, down. Then it did an A, B, and a C, and it's even a irregular B, it seems. Yeah. That means that the downforce is strong. Then it moved up here around the area of old wave 4, and then it moved down. And you look at the stochastic and you look at the RSI. I think this is a bull trap.
Got it.
And and then I have some pictures for S&P 500s also. So how does it all play out? Because if if I see this deflationary game playing out, I think I've been calling the top here and calling almost the top here and being wrong.
We're the boy who cried wolf for a while, buddy.
Yeah, that's me. You're talking. That's me, or
me too. Me.
Yeah. We okay, yeah, we are. I mean, but it's because of the what dawned on me was that we're going to see an ending expanding diagonal. So you have 1, 2, 3, 4, and then you're actually having a wave 5, which is consisting of 1, 2, 3, 4, 5. So that's why I've been calling for some time now for maybe even a high above this trend line. May not go as high, but I think there's a chance it could. So 30.
What's that, around 3,200?
Yeah, something like 30, 40, something like that.
Oh, okay, barely a new high. Okay.
Yeah, barely a new high. Just to this area around there. Okay. It doesn't need to move all the way up here. I mean, we already this triangle is ending diagonal is already.
So everything's going to go down together. They just have different starting points on the race.
Yeah, that's what I see, unfortunately. Okay. And if you look at the if you look at the VIX, it seems also again like the this kind of ending diagonal 1, 2, 3, 4, and then we have an A, B, and a C again with a throw over here would be push down in terms of volatility, which could coincide with this a new high some really soon. I think we could move up really quick, but that's really the time to get out of everything here. So and then when it comes to the euro, this was what I said in January. Still there. I mean, we have moved lower. What I think we're seeing is that again we have a B, C here, so it's a W. It's actually double zigzag, I think it is. We see for in the major picture, and what they are made up of are ABCs. So this one here goes from down to C is going to be 5 waves down to C, and I'm going to hit down here around this level from the 2000 around that area. And you can also see this is a big topping area, topping pattern. So you have above the black line here, when it drops below around this area in 2014, I think it was, that's set target for around this area. So we're going to see quite a strong
What's a catalyst for the euro crisis? Deutsche Bank? Are you there, Henrik? You're cutting in and out.
Can you hear me?
Now
Hello?
I can. Yeah, now I can.
Okay. Let me try to go to. Can you hear me, Dave?
Yeah, I can hear you. Yes.
All right. So the kind of pattern I think we're seeing is this one, which is a very complex one, and that's why I think it's been difficult for many analysts and Elliott waivers to understand what's really going on, and many are calling for much higher level on the euro. I think what we've seen since the low in November in euro is a move up in W here, and then we had the X move here, and then we have actually an expanding diagonal here for the last part of it. So A, B, C, D, and then we have an A, B, and then a C up here. So we should top out in this area, or maybe a little higher. You can't even move all the way up here, but I think we're going to top out around this area.
Okay.
And that turns, and that together with my Dixie looks like this. So you had the A around here, a B, and then what we've had here is actually a leading diagonal for the first wave. So that's actually part of the first wave up. And if you do that, if we observe that, we also see is like a very clear correctional move here, a correctional move up to B, and then we have something here which could be wedging down to around this area, which seems to be around the old 4. So somewhere around here we could be moving up. We also seem like stochastic and RSI could be, you know, moving into position to do exactly that. So ending around here and then moving up really strong and catching a lot of people on the wrong side of this. 110
is you're one of the super dollar bulls. What's your target?
107, 109-ish, yeah, that area.
Okay. Thank you.
So that's you know, that's pretty much what I see. Not much have changed. Things have not really been developing as fast as I thought they would. I mean, I would have expected things to move faster, but the euro have seemed more resilient. I don't know how much. You know, we know that it's manipulated by central banks, but things have been dragging out for much longer than expected.
Well, I'm a fan, Henrik. You're my trading warrior brother, and as you notice, I have your back. And really appreciate you coming here and giving me really a sense of reality, because I get a little bit shorter term. Let's see if there are any questions from. Okay, copper supports a deflationary move. Okay, mystery traders expects range bound for a year or so, I think. Do you know who he is? I interviewed him once. Anyway.
No, not sure.
Mystery. Yeah.
Mystery trade. Oh yeah, mystery trade. Sure. Yeah.
Yeah. You know, he has a theory that they want to take every currency to parity for the reset. Do you think there's going to be a reset when the Fed has to act?
Oh yeah, I think that what happens will be, you know, as it's back to this picture. So it's back of understanding that we're going to see a deflationary phase first,
right?
And that's when the liquidity will be drying up, and we are seeing some of that already. But I think it'll, you know, move much faster. And then when Fed steps in for real, and we have to consider again, the for real is like when they introduced QE. So QE this time is not going to be enough. And
instead of it lasting 8 years, being effective for 8 years, it's going to be effective for 8 months.
Yeah, and the thing is that if you then pair it with the perspective that I have on the different, it's going to happen at a time where commodities will, you know, secularly be bottoming out, and that's why if you if the Fed starts some kind of stimulus, then you're going to have that as a very strong support of the secular move higher.
It sounds like you're really I know you're going to be you said you want to back up the truck for gold at 800. Almost sounds like you're a little bit more constructive agricultural commodities than even gold.
Yeah.
Am I right?
I don't know. Yeah, I mean, there are so many. All commodities will be at a very low.
Throw a dart.
Exactly.
You're short the dollar and long anything tangible.
Exactly. That's when we get to that point. Okay. But I don't think we're there yet.
Yeah, Henrik, thanks so much for coming by. The best way for people to follow you, I know that you mentor. You can follow Henrik on Twitter at Henrik Zeberg. Where else, Henrik?
Well, I do have a WhatsApp list where I have some subscribers where I write out every day and a weekly update, and then it's on Fintuit as often as I can find the time for it.
Okay, buddy. Well, I appreciate it, and sure makes me want to be raising cash. And
yes.
And getting my war chest ready, maybe the buying opportunity of the millennium coming.
Oh yeah, definitely. Okay, thank you very much, Dale. Thanks for having me.
All right, Henrik. Good hunting, buddy. All right, everyone, that's a wrap. All right, no one freak out and jump out of windows. Let's capitalize on it. And you know we'll see it. We'll be there. And remember this, don't just count your pips, count your blessings. You're welcome, Albert. Drew, if my memory's correct, I think he's talking 5,000. Okay, so that's a wrap. See everyone for Turnaround Tuesday. Adios. Thank you, Henrik.
Thanks.